With all the recent volatility in the markets, people are starting to wonder how they can protect themselves in their investments and maybe even make a little money in a down market.
Amber, it's a lot easier than most people realize. Now, when people think about making money in a down market, sometimes they think we need some complicated financial instruments, puts, calls, all these options, right? You actually don't. We actually have a portfolio that allows our clients to make money in both an up market and a down market very simply.
And does it require a lot of investment?
No, not a lot of money. You can get this with $25,000 or more.
That sounds great. So what is the secret?
So we use what's called a structured note. A structured note is a financial product issued by these large Wall Street banks. Think JP Morgan Chase, think Goldman Sachs. These big banks, on the back end, they're using those complicated products. On the front end, for us as consumers, it's a nice, neat little package that says if the market goes up, you get all or most of that gain. If the market goes down, there is a predetermined limit of downside protection.
So it sounds a little bit complicated. Let's break it down and simplify it a little bit.
So I'm going to put a chart up here for our viewers, Amber, to kind of give an example of this. So we call this a dual directional structured note. And in this example, let's start, it says here there's a 12% cap and a 10% buffer. What does that mean? That means the market will go up 12% or less, you get 100% of the gain. If it goes up more than that, it's capped at 12%. So that's kind of the drawback or the cost, if you will, to this type of an investment. You'll see this has a buffer of 10%. What that means is if the stock market goes down less than 10% during that 366-day period, the investor will lose no money at all, okay? If it goes down 12%, well, they have a 10% buffer, so they would lose 2%.
So it sounds like we're giving them some downside protection, but how do they make money if the market goes down?
Well, so that's the second layer of this structured note. It says if the market is down within that buffer zone, so between 0% and the buffer of 10% of this example, the investor actually gets the inverse as a gain. So let's go back to our chart and show you here. You'll see on the lower left-hand column here, it says if the market's down 20%, you have that 10% buffer, so your account would be down 10%. But if the market were down 9%, that's less than the buffer, then the client or the investor actually gets a 9% positive return. So you can see all these other examples on this chart here where we're limiting the downside risk if it's a very big market correction, but if it's a minimal market correction with this volatility, if it happens to end on a down day a year from now, the client or the investor may actually receive a positive gain to their investment portfolio.
So it sounds almost too good to be true. So why wouldn't people just invest everything in this?
Well, there is still some risk, right? There's credit risk associated with these big banks, but primarily we tell clients about 25% or less of your investable assets should go into a structured note. Couple of reasons this might be a good fit is if you think the market might be going up, but you're not quite sure, this is a great fit. If you think the market's going to go up 35% this year, then you wouldn't want to have a 12% cap like in this example, because then you're giving that up. If you think the market's going to go down 40%, then again, this would only give you a 10% protection. You'd still be down 30%. So it's kind of how the investor feels the market might be going, or the advisor feels. We feel this is a great option for 2022 because markets are a little volatile right now. It could go either way in the next year or two.
So we always make sure that we look at our clients' risk tolerance before we help them make decisions like this. So make sure that you talk to your advisor about your risk tolerance. So Corey, you have given us an example. It's a snapshot of what it's like right now, but these change actually pretty regularly. So where can people go to get the most up-to-date information?
So these change about every 3 weeks. There's a new offering from Gradient Investments, who's our money manager. You can go to newgenbufferedindex.com. We'll put the link on the screen and in the description below. And you can see all the updated offerings. You can watch another video explanation there from Gradient Investments and determine and then meet with your advisor or with us to determine if that might be a good fit for your portfolio.
Make sure that you are discussing your risk tolerance with your advisor. And if you need help understanding this, you can always go to workwithnewgen.com to schedule a 15-minute introductory phone call with us.
Yeah, we'll help you out if we can, because you can always make the rest of your life the best of your life.
Plan now to retire happy.